But right now, I think we're going to get a lift off. Watch Bitcoin. Bitcoin is a canary in the coal mine, guys. If Bitcoin takes off, the market will follow. If Bitcoin rolls over, the market will follow. And that's just the way it is. So my biggest thing every day, I see what's Bitcoin doing, what's oil doing, and that informs me. That informs me as to what everything else will eventually be doing.
And good afternoon, everyone. Bob Kudla is with me again. I know every month you look forward to our conversations in a general trend forecast moving out through the next month or two, maybe a quarter. But you can see how the world is, well, seemingly more upset than it was last month. Things are just a little bit more skittish, shall we say. There's everybody walking on eggshells. Now, today we wanted to talk about all eyes on the Fed June 11th, because it does seem that something giant this way comes in terms of finance, but on the war front, the drums are beating. Something big this way comes. And also, if you're looking into Middle Eastern news, on June 6th, Saudi Arabia will officially announce the end of 100% exclusive use of the US dollars and will accept payment for any other thing. So, Bob, where does that leave us? And we're going to share the screen today so you can take a look at what's on Bob's end, what his eyes are seeing. And as always, we're just going to jump between different points here and hope you get something out of our talk. And please remember, tradewith2030.com is where you're going to want to go as we move through and talk about the future of Bitcoin, cryptocurrencies, stocks, and the opportunities in there as the Fed starts to shift. If it does, that's going to mark a significant change of between the rock and a hard place. They've decided to go somewhere, and then the entire world's going to trail along with them. So June is a huge month, in my opinion, as well as Bob. So, Bob, the floor is yours. Thanks for joining me.
Yeah, Dave, thanks for having me. Yeah, so let me give you our thoughts for basically from the Fed meeting on June 11th to Labor Day. We think because the price of oil has been coming down, rents have been flat, and even food prices have stabilized, is that the Fed's going to declare victory here, and it's going to be dovish. They're not going to lower interest rates, I don't think, in June. But you're already starting to see the 10-year yield is starting to anticipate softening in their stance. And I think what's going to happen is they're going to set up a blow off top for the market this summer, a low volume summertime, just grind up higher every day kind of a move until you get to that Fed meeting that they do Jackson Hole in August. Then I think they're not going to have a choice but to lower rates in September, because the economic backdrop is fairly bleak right now. So this is definitely a divergence between Main Street and Wall Street. Wall Street's going to react to the cost of funding to be reduced, but Main Street is not going to be able to participate in that because the business models are impaired. Because even though the inflation rate might become acceptable, the cumulative inflation amount is causing businesses to actually, their profitabilities are collapsing on the lower end. This is from studies done at the tax level, the banking level. They're looking at profitability because they're analyzing every customer metadata, and they're saying companies are actually less profitable this year than last year. And the other thing that they've studied is that their loan volumes are increasing faster than their revenues are, which means that's also a drag on profitability. And what that usually means is that companies are making decisions whether or not to hire, or because their cost of labor is going up because the mandates that are coming from the government in response to the inflation rate that the government created, is that you're going to start seeing, higher automation, lower hours. And what I've been seeing in my travels, and I just did a trip, is that companies are just cutting hours actually and not being open certain days. So they're making decisions now based on, it used to be you want to be open every day of the week for as many hours as you can because the revenue profitability was exceeding your costs. Well, now the cost structures have changed, and people are just simply closing on days or hours where you can't justify the return. And so I think this is the first stage of that. Now, going back to my initial part of the monologue here is that companies are going to Wall Street's going to react positively to the Fed, their reaction to the inflation information. So when you go into disinflation, right, disinflation precedes deflation. And so what they're going to say, they're going to misinterpret disinflation for a positive Goldilocks soft landing, and we're going to drill ourselves into the ground here.
Hey, Bob, can I stop you? Can we get a definition on disinflation? Like, as you would read it out of a dictionary, and then deflation also to compare those 2 points there.
Yeah, deflation is the outright reduction in the cost. Disinflation is the reduction in the rate of change. Inflation is obviously increasing of the cost. So you can have inflation, but you can be disinflating at the same time. If you were inflating at 3% a year, now you're inflating at 2% a year, you're still inflating, but you're disinflating because your rate of change has fallen. The Wall Street likes disinflation because it changes the dynamics between equities and bonds, and until it will roll over into deflation, where then they panic out because revenues are going to collapse for businesses. Then they'll shift the bonds fully, and that's what will happen after the first rate reduction. Usually get a good guy, but history has shown every time the Fed has reduced interest rates, you're in a recession and the stock market rolls over. But there's a period of time where they think everything good's going to happen, and that's coming up now. This June to Labor Day window, if we're going to get a blow off top, it's going to be then. If we don't get a blow off top, then we're in big trouble. So that's kind of our setup for that. It's going to help everything, but Bitcoin's been sniffing it out. I'm going to share my screen. I'm going to show you the Bitcoin chart. And there's a lot of ways to play this Bitcoin move that for people that don't want to buy Bitcoin, but want to participate in the move, Wall Street has provided a number of products that are going to be nicely and profitable for people. So let me share my screen here, Dave. So let me explain a couple of things too, because we operate under an algo environment. So we just don't trust on Bob's gut for this stuff. And so this is Bitcoin daily. So Bitcoin had this run. If you see this purple bar here, this is buy the dip, and then here's the sell the rip kind of our first aspect of our algo. Then the second aspect is when you see this blue white line, blue shading, we call this the worm. And so when you're in an environment where your price action is above what we call our range bottom, and you get a buy signal, this is the most bullish sequence for us. This is on a daily chart. So you had a move here where price went from 39,000 up into 52,000. Then you had a consolidation. Now it was up to you whether or not you want to take profit here or not, or you wanted to just keep an eye on things. As long as the ranger stayed intact, usually you stay in the trade. And then you got that second move here, which is almost like an ABC move, right? We hit the top all-time highs, and now we've been in this consolidation mode here. If you notice, where the price action's been pretty punk. And then we actually did a breakdown. And this breakdown here was what's called a fake breakdown. And then so you got another buy signal here. And so we've been counter trending this move, right? So those who are totally bullish on Bitcoin never blinked, okay? Those who are just trading this on a pure bull mode, it has to break this $74,000 range. Basically, the double top has to break. This is a very, very bullish consolidation, Dave, because the pullback's been quite mild. If you notice here, these lines here, these are Fibonacci retracement lines off of are these moves, and price held above our first Fibonacci extension. And this is why you would have wanted to buy this worm change here right at 60,000. And look, we're over 70,000 as we're talking here today. Once we break 74,000, Dave, then we're in a different world here. And then you got measured moves now that'll take you to anywhere between 104 to 130,000, with a stop around 85,000. So this is Bitcoin's action here, and so Bitcoin's sniffing out liquidity coming in from the Fed, the Treasury, businesses, buybacks, yada 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 yada. Okay, and then now you have looking at oil.
Yeah, and Bob, if I could say something quickly, using your software also, I find, we've done a bunch of different range trades and try to figure out which one was the most profitable for us and myself here to get in. Was it the 15-minute? Was it the 5-minute? Was it 30-minute, 1 hour? And generally, after all those different types of trades, figuring out profit loss after everything, the best for us was following it on the full day trade. Something
Yeah,
like you're talking about there on the daily, because you could come in and out, in and out, in and out on those trades and waiting to scrape a few cents, a few bucks here. But by the end of the day, if you just would have waited that entire, 24, 18-hour period, the trend was that direction. It just would have held it. It was much more significant on the gains. So, in a sandbox scenario, working through it and keeping a log or a journal of what happened with the trades, for sure, holding it for that longer time period of 12 hours to 24 hours showed significant gains versus trying to get in and out, in and out, in and out on that, shorter time frame. And that's just from personal experience. So watching that go on the longer time frames absolutely does signal correctly.
yeah, and just so people know, Dave is a customer and he uses this software, so
True.
he knows this stuff pretty well. Now, I personally, now Bitcoin, I'm a longer term holder on it. I'm in that's my Bitcoin chart. For equities, I prefer 4 hour for me, but that's still a pretty long range chart because I trade more aggressively. But if you look at Bitcoin here, I mean oil here, oil topped here, and we got a change in the worm. So you would have been out of this trade at $79, and this thing dumped all the way down to 73. This is by design, right? They are trying to create a narrative that inflation has been beat. Okay, but once the Fed, and also we're in what's called a weak period for oil. Basically, May and June are weak periods for oil. Usually around the middle to the end of June, you'll start seeing oil start pushing up into September. So, for those who like energy, which I do, is that, if you're looking to trade aggressively here, you just simply, you're going to wait to either buy these fib retracement areas recovery, or you're going to wait for the worm to turn, which is giving you a warning right now that maybe oil has gone too far too fast, and there's a trade here. When you're below the ranger here, these are counter trend trades, as you know. So you have to be a little bit more watchful. You don't not be a lazy trader in these environments, because if you see here, it'll push up. Okay, it got stopped, pushed up, it broke through. Right, a lot of people bought this move, and then it failed, and so you just have to just be more watchful when you're trading against the trend. And oil's been consolidating for a while. This is why I said this will all come out in the CPI reports over the next couple months, Dave, and it's going to show that the Fed has won, but they have to spend so much money to keep the government going, and they're going to have to buy back so many bonds that are coming mature, that you're going to see, and you and I were talking beforehand, you'll see weakness in the dollar. You'll see commodities come back. You'll see gold, silver, the miners, energy will all come roaring back. And so I just want to kind of show you guys that. And, when oil goes down, bonds rise. If you notice this, end of April, we got a bottom in the 10-year price yield. I mean, the top in the 10-year yield and the bottom in price. And now we're breaking out here on there's a cup and handle on TLT. You measure that move by here 87 to here 92, 5 points. We put this trade out this morning. We're looking for $97 on TLT. Okay, so a lot of people, you'll see, and I do a podcast every day too, as you know, Dave. Today we're going to show you
I
this.
jump in on that. I leave a comment. You always say, "Hey, Dave, what's going on?" I'm backward in the live chat.
You have a trade that a lot of traders use, is that they'll buy equal weights long bonds and equal weights oil, and basically, that's how they protect themselves, and they probably sell, call contracts against that to develop a synthetic yield. But you can have, if you're long TLT, you want to go long when oil is suffering, and when rates are rising, oil protects you. And so a lot of wealthy traders use oil as basically their barometer for inflation, because it's such a huge market. And what the market's telling us today is that supply is exceeding demand at the moment, and the recession disinflation trade is now ascending. And when that flips over, you'll see TLT roll back over again. You'll see oil go back up higher. So that's just another yin yang trade you do. Remember, most wealthy people are not directional traders. They're always protecting, hedging, and trying to scrape off yield. And that's what keeps them from going bust in these crazy environments. But we can't do that to the same level. So we have to kind of shift our focus back and forth. And TLT is setting up itself right now. This is a cup and handle. When people don't know what that means, here's the cup, here's the handle, and then he'll be the explosion back up higher. And I think this is 96 area. I think it'll attack the 96 area here. So this is a nice trade. But in the meantime, you're picking up a monthly dividend while you wait. But I just want to talk to people about that today. And this is how we trade. So if you want to trade with us, I put specials together for Dave. He has the website for you. If you accidentally come to my site, you have to tell people that you watch this on Adapt 2030, so I can give Dave credit. I support his channel this way. Dave and I have been doing this together now for 10 years now.
Many a year.
Many years. And this is my way to support his channel. And I give a portion of what I receive from people coming to Dave, so he can continue doing what he does. And so it's a win-win-win. I'll help you make money. I obviously grow my business, and then Dave gets to continue to provide, I think, an incredible, unique, and valuable service. Nobody does what Dave does. We love it. And I still remember, Dave, when you and I were trying to do this at midnight because you were in Taiwan, and we're recording these things, and then you're spending the next 6 weeks trying to cut up 21 different shows. I don't know if you remember that. That was pretty funny.
Yeah, that was the world, the realization of we live in a 24-hour world where everybody's on different time zones, and you need to readjust your mind that there's no more like going to that office from a certain amount and maybe taking some work home and finishing. It's like you're on 3 a.m., you're on midnight. You accept that, and that's part of your reality as we're in a 24-hour world. Well, the trades are moving in the same thing. You got all these different markets cruising around the world in 8-hour segments too. And how do you jump in and out of that? But the world has changed significantly. And we were talking and trending a lot of different forecasts, just in a general way of how the world was going to move in the next decade based on food prices, et cetera. And a lot of those things are happening. And now we come down on a more the granular look under the microscope, and you can see things going out a month and certain trends as well. Remember, that's tradewith2030.com or tradelikeagenius.com, which Bob was referencing there about going over to the site, taking advantage of the specials. So one thing, you're talking about Labor Day and rates remaining and things on a status or on a status quo, if they remain the same and stable. Now, what happens if the war front breaks out in Ukraine? Because some of the feeds I'm looking at is, France possibly declaring conflict here early in this part of June on Russia. And everywhere you look, the war drums are beating super heavy that we're not getting a lot of that in the American news. So to throw away some of the debt, where does this take us if a war really breaks out, even if it might be limited just to Europe and just with Russia? I know obviously the United States will get involved, but you got the status quo where you're talking about taking us to Labor Day with these rates and how people will perceive that. But if we get into a conflict, then what happens in your opinion? Based on historical past of wars breaking out during different economic cycles.
Yeah, well, war generally is bullish for the stock market because it means government spending. The only caveat that I have for that is if Russia decides to be asymmetric. I don't know if you remember, you and I were talking on June 4th. I don't know when you're going to publish this, but on June 3rd, we had a number of stocks that opened up and went to zero, essentially. Yeah. Including Berkshire Hathaway. So we don't know. I think there's going to be a symmetrical attack by Russia on Western assets. If I'm cutting out, it's because my alerts are going crazy here
Yeah, no,
now.
and I was going to say something about the alerts, if I may, because those charts you were showing me with the oil legging down that heavy, because we played around with different alert levels too, 2% down or up, 3% down, and we found that 3.5% was good for us because once it drops that much or raises that much, it's a significant move, and you can just tail off on that and jump on it immediately because most of those bounce off at least at some level or peak and then drop, and then you can. But anyway, hitting those, what do you get? And then we have a 5% limit. So if I was to hear that and then a 5% limit drop, I'd be like, oh no, you already immediately drop everything you're doing and run in and see what's going on.
Yeah.
But yeah, I'm with
No,
you on the alerts there.
and then usually if I'm on a Zoom call or something, my alerts go off, I cut out. So if ever I'm talking, you're listening and you don't hear me, it's because my alerts are firing. So something's happening. Europe just closed 8:30. But here's the deal. If Russia goes asymmetric, it could cause us harm. Russia knows they can't go toe to toe with us, right? So Russia has three choices. Well, four really. They can use proxies. They can go direct confrontation. They can go nuclear, right? Or they could go cyber non-symmetrical, right? That attack that the HIMARS did on the Russian assets in Belgorod was a game changer. Russia was gaining upper hand because they just had more massive firepower that they could just grind those cities into dust, which is ironic because if that was Israel, everybody would be in jail. But since it's Russia, nobody says anything. I mean, can you imagine all the civilians they've killed in these cities? But the attack on Belgorod, they took out 4 miles of a rail depot. It basically took out 2 or 3 months worth of Russian munitions. Okay. And, I think it was a move that had to happen because Ukraine was going to lose the war if Russia can continue just keep pumping artillery. Basically, it's old Soviet era strategy. And look, I was in the Marine Corps during that time, and that's the Soviet doctrine, just to basically grind you into death and then move forward a mile. Grind you to death, move forward a mile. America doesn't play that way. So we gave Ukraine the permission. Look, they're going to keep all their assets out of the conflict zone because you're not attacking. You need to change the game. Now, if Russia wants to do this, it's a big problem for them, and I noticed they attacked Ukraine's energy infrastructure. Well, the Russian energy infrastructure is at risk too. HIMARS HIMARS has the ability to attack Moscow. That's why the Russians are pissed. If they hit Kiev and then Ukraine turns around and hits Moscow, then it's on like Donkey Kong. Okay, and it's going to be really really interesting to see what happens. But America and Europe, the technological superiority is there for everyone to see. The Russians have no answer to HIMARS. Okay, and now we're giving them Patriot systems, and we're going to give them best ADA systems where they can't, anti-drone systems where they can't touch these HIMARS. So it's going to be really interesting. They're getting F-16s. That means the Russians can't come in with their fighters because the F-16s will take them out. It's going to be really, really, really interesting to see. But it'll be bullish unless Russia decides, look, and if I was Putin sitting back, knowing what I know, he's going to go ahead and he's going to go cyber. He's going to go terrorism. He may animate the cartels in Mexico. He may do those kind of things, and I think that's probably what we have to watch out for because that we're very vulnerable. We have a really tough skin, but we have really weak flesh underneath. And I think if they go after our infrastructure internally, then I think it'll be bad news for us. Sorry for the long-winded answer, but people really need to understand that nobody can beat the United States direct. Even China can't. But we're very vulnerable internally.
Yeah, and you mentioned that, it's back to the cyber thing, because you mentioned that drop, Berkshire Hathaway lost 1.2 trillion in value and like 99.3% down. All right, so that was one glitch in the US market system. But then just a day or two prior, they had 300,000 people's bank accounts locked where they're unable to access their funds. And then part of that was in Tennessee as well. So that whole system of three different, I forget the participants, but they're all intertwined with settlements, et cetera. But three different, one was a clearinghouse and the other two were actual banks. And they're customer funds are locked up and they are unable to access that for 6 more weeks. So, I mean, to have two events within 3 days is, the borderline what you're trying to describe there on the cyber.
Yeah, look, I think they're testing it. That's why, you just can't be an all-in bull. I think you've got to be mindful here. But all things being equal, liquidity equals stock price. The M2, which is the money supply, has turned positive for 2 years. And so that's going to help the stock market. Lower rates will help the stock market. None of this stuff's going to help the Main Street. It's all Wall Street. And then you're going to realize that revenues are falling. I mean, look at some of these earnings reports that are coming out. They're atrocious. Okay, so you're going to get a short-term good guy, and a long-term, then we're really going to go into recession. So always opportunities, as you know. I didn't care what it does. It's good to know what you think it's going to do, but whether the market goes up or down, you can make money trading. And so it's probably one of the few places where you can be economically neutral and still do fine. But right now, I think we're going to get a lift off. Watch Bitcoin. Bitcoin is a canary in the coal mine, guys. If Bitcoin takes off, the market will follow. If Bitcoin rolls over, the market will follow. And that's just the way it is. So my biggest thing every day, I see what's Bitcoin doing, what's oil doing, and that informs me. That informs me as to what everything else will eventually be doing.
All right, great wise advice there. Remember, trade with 2030.com or tradelikeagenius.com. Please tell them David sent you over there. You listened to our interview. And please leave the comments in your comment box below, because I do read through those. Bob does too. And then, we can formulate some questions based on what you're still wanting to, get to or understand the bottom underlying points of some of the conversation. And I can drive that into next month's interview, in addition to new events that are occurring. So thanks for watching, and bye for now.